Many investors are now looking at ways to try and time their Bitcoin profit taking to be as close to the cycle peak as possible. And with this new metric, we can now make sure we're scaling out before it's too late. Today, we're going to be looking at a brand new metric on Look Into Bitcoin that's going to help us front run the bull market peak. So what exactly do we mean when we say front running the bull cycle peak? Well, just in a simplistic example, if we were to say that the bull cycle was going to top out at 100,000 US dollars, front running this would be starting to sell at $99,000. Then some people would sell at $98,000. And therefore, it might not actually reach that $100,000 figure because everyone's already begun selling in anticipation of this being the top. So this is front running. And we've all heard of the pi cycle top indicator. It's one of the most accurate metrics in calling not only the price at which the Bitcoin bull cycle top will occur when looking at the percentage difference in price compared to these moving averages, but more importantly, the exact time in which the price peaks out. So we can see here in every single one of Bitcoin's bull cycles, within just a few days of these moving averages crossing over, which is the 111-day and the 350-day moving average multiplied by 2, we can see that Bitcoin's price pretty much tops out. It always has within just a few days, and it's incredibly accurate, and especially in this cycle, it'll definitely be a metric many people are looking towards to try and time their Bitcoin profit taking. But we do have to take into consideration that if this is to cross in this cycle, it's not guaranteed. If it is to cross, then we might get a huge dump immediately as everyone's waiting for this signal and it's just going to sell as soon as we get that pi cycle top signal. But what happens if maybe we don't actually reach this? Again, what if in anticipation of these moving averages crossing, we actually get some preemptive selling? We get some people trying to front run the pi cycle top signal. Well, this is why we came up with the pi cycle top and bottom indicator, or more simplistically, just a pi cycle oscillator. So we can see here, this still has the pi cycle moving average, the 111-day and 350-day multiplied by 2. What we're actually now doing is looking at the difference between these two moving averages. If we actually scroll down a little bit here, it'll come with the exact maths behind this. But we can actually see this really accurately identifies not only the areas where we should be taking profit, which the pi cycle has historically done very accurately, but also areas in which we should be scaling into our positions. And I know now, as we're in the swing of a bull cycle, that we may be a few months or even years before we get these golden discounted BTC opportunities again. But it is handy to know for future cycles. But what we can see here is rather than just this immediate cross sell signal, we now have this sell area, this sell range. And the way I like to look at this oscillator is almost, I know it's a decimal between practically 0 and 1, but if you look at this almost as a percentage for how far throughout the cycle we are. So for example, up here, we could see that the bull cycle was 91% complete, 95, 97% complete. And once it hits 1, this indicates that the pi cycle top signal actually occurred. But because we now have these sell zones, this red area up here, we can now say that maybe we should begin scaling out of our positions just in advance of this signal actually occurring. So if we just isolate between the most recent 2 cycles, we can see here that this actually crossed into this upper red sell zone when price was at around $10,000, $11,000. So it was a little early before the actual bull cycle peak. This is why you shouldn't sell everything immediately. I know the pi cycle top, when it has given the signal historically, has been a great time to sell everything immediately. But like I said, we need some plans in place in case that doesn't happen this cycle. Maybe people start front running this signal. So if we can start locking in some profits just a few days before the actual peak occurs, like we could see, it was $11,000, but in almost 2 weeks, it had doubled in price. So we could see that this actually was the most opportune moment to start scaling out of your positions before price in just a few weeks later dipped to well beneath 10,000. And again, if we look to the most recent bull cycle peak we had here, this crossed into this upper region again when price was about $57,000, $58,000, and then you could have started scaling out of your positions above $60,000 in the high 50,000s. Then when we got this pi cycle cross here, when price was around $58,000, $59,000, $60,000, you'd have already been taking profit for a few days, if not a couple of weeks prior to this signal, just selling small portions of your capital. And why are we trying to scale out of our positions? Well, we all know how hard it can be to time the market. And if we look at something like trying to scale into positions, it'd be almost impossible to buy with 100% of our capital at the exact bottom of price action. So why should we expect to take profit with 100% at the exact top of price action? It's practically impossible to do. So this is where the pi cycle top and bottom indicator, or pi cycle oscillator, really comes in handy because we can now start scaling out at peaks and start scaling in at bottoms with a huge degree of accuracy. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on lookintobitcoin.com, your number one source for Bitcoin information. So just to summarize, this brand new Pi Cycle Top Oscillator chart from Look Into Bitcoin expands on the existing Pi Cycle Top indicator we had by now measuring not only when these two moving averages cross, but the actual distance between them so we can get a greater understanding of where within the cycle we currently sit. And we can now clearly identify not only the most opportune moment to take profit on our Bitcoin positions, but also when we should start scaling into our positions as well. So now the indicator not only calls the exact market peaks, but also pretty much the exact market bottoms as well. And now, as opposed to just having an individual sell signal when the market cycle has likely topped out, we now can start scaling out of our positions really close to the market peak, just to make sure we aren't selling potentially after the peak has happened, just in case other people are front running. Basically, we're just trying to maximize our profit potential and make sure we're not holding on to too big a bags after the market has already topped. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to professional resolution charts, advanced macro and portfolio data tools, in-depth crypto industry reports, live and personalized indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on the Pi Cycle Oscillator chart we've just added to Look Into Bitcoin. And let us know if there's any other metrics you'd like to see in the future. We're always looking to expand to provide the best Look Into Bitcoin charts possible. Thank you all very much for watching, and I'll see you in the next one.